Wall Street is in suspense, looking forward to the crucial data on the US labor market. The benchmark stock indexes rebounded from the lows of the week. Yesterday, investors saw a long-awaited growth in the stock market. And today, they will find the missing piece to the puzzle before the Fed's policy meeting next week. Before we discuss the red-hot employment data, let's speak about high-tech stocks, which were the catalyst for the growth on Wall Street yesterday. The stock indexes gained ground thanks to the AMD and Google shares. In turn, they propelled a rally of the high-tech sector and encouraged the Nasdaq to log their strongest performance. The S&P 500 implemented the optimistic scenario of analysts and closed in the green at 4,585, 0.80% up. Wall Street indexes traded quietly in the New York pre-market. After the US NONFARM payrolls, the three stock indexes reversed sharply down immediately. Futures on the stock indexes shed 0.2 and 0.6%, suggesting a bearish session. The S&P 500 is expected to trade in the intraday corridor between 4,546 and 4,586, according to the baseline scenario. If the bears assert their strength, the index will retest 4,498. Alternatively, the buyers could push the index up 4,598. Yesterday, US stocks benefited from a burst of optimism about artificial intelligence. Alphabet shares rallied by 5.3% because analysts welcomed the rollout of the brand-new AI software product designed by the Google parent company. AMD shares surged by almost 10% after the company had estimated that the potential market of its AI processors could amount to $45 billion this year. Stocks of other high-tech giants also went up. Nvidia and Meta shares gained more than 2%. Amazon shares jumped by 1.6% and Apple shares added 1%. As for the economic calendar, US initial unemployment claims disappointed the market as the increase slightly missed the consensus. Investors have been searching for recession warnings on the back of softer employment in the United States. Oddly, a series of employment data released this week signaled weakness in the labor market, but the red-hot NONFARM payrolls contradicted these signs. And still, the official report caught the market off guard, pushing the stock indexes down. The US public and private sectors created 199,000 jobs in November compared to 150,000 jobs in October. The figures strongly exceeded the consensus of 180,000 new jobs. Nevertheless, for the second month straight, the number of jobs remains below the average monthly increase of 240,000 recorded in the last year. This trend signals a slowdown in employment growth. Stock investors found slight relief because the market was betting on rate cuts starting from March. The unemployment rate also discouraged investors. The jobless rate fell to 3.7% in November, following a 3.9% in October. The consensus had suggested a flat reading, and the rate retreated from the highest level in nearly 2 years, recorded in October. This also confounds the recent trend of a cooling down in the United States labor market. On the top of that, wage growth was the fly in the ointment. Average hourly earnings rose twice to the 0.4% from a 0.2% a month ago, and this figure also was a 0.1% higher than expected. To sum up, a batch of the previous employment data this week revealed some weakness in the labor market. so the fresh statistics came as a bombshell. The report is complicated by the fact that workers in the car manufacturing industry and actors topped the strikes and distorted unemployment data. About 25,300 members of the auto workers union ended the strikes against Detroit's big three automakers on October 31. Wages were also likely posted by 16,000 actors, union members returning to work. In any case, anxiety in the market has increased and bets will be revised after taking a closer look at all the figures. So the market has not found questions to all its answers before the Fed meeting. Meanwhile, the US dollar index was under pressure from its major counterparts, especially the yen, for the whole week. In the light of the NONFARM payrolls, the greenback has already recouped some losses. Its index opened the New York session at about 104 and 0.45% up. The US dollar benefits today from the uncertainty about the Fed's agenda for interest rates and doubts about a rate cut in March. Hence, the index could enjoy its intraday growth today. The instrument is expected to trade in the intraday corridor between 103.70 and 104.20. Earlier this week, the US dollar was buoyed down by expectations of the employment data, which came as a pleasant surprise for the US currency. Amid uncertainty about the Fed's policy decision next week, the US dollar might hold the upper hand over the other major currencies until the policy meeting. The Canadian dollar was gaining ground for the most part of the day, and the USD CAD pair opened the New York trade at 1.3568, 0.17% down. The intraday corridor for the instrument is defined between 1.3540 and 1.3620. After the Bank of Canada's meeting, the loonie does not rely on any support from the regulator. The currency is certainly sensitive to oil prices. Bearing in mind the fall in oil prices, the Canadian dollar has no excuse to grow. The benchmark oil grades have tumbled by 27% from their peak prices of September. This is positive for inflation but bad for the commodity-reliant loonie. Today, it managed to take a break and enjoy the recovery in oil prices. Both benchmark rates rebounded by 2%, supporting the Canadian dollar in its standoff with the American peer. The crypto market is consolidating. Bitcoin has not escaped from a baseline corridor. The number one crypto is trading sluggishly for the most part of the day. The token rose by 0.7% to open the New York session at 43,700. Unlike Bitcoin, popular altcoins are trading actively. Cardano and Solana logged the biggest market moves, having increased by 14.5% and 8.8% respectively. As for Bitcoin's intraday outlook, the price is still fluctuating between 43,000 and 43,700. The bulls are not going to give up. If Bitcoin settles above 43,840, it will easily test the area of 44,570 and 45,300. Important levels for the sellers are $42,600 and $42,200. That's all for today. We keep monitoring the financial market situation. Subscribe to our channel and good luck in your trading and have a nice weekend. See you on Monday.